Welcome back to Zimsec O level principles of accounts. In this video, I want to look at the June 2025 paper one. So we are going to look at the multiple choice question paper. So first question that we have is which of the following business organizations has an advantage of raising more capital? So you'd see that we have partnership, private limited company, public limited company, sole proprietor. So according to the responses that we have, you'd see that a public limited company here's more opportunity to raise more capital. Remember, when we are looking at a public limited company, we are going to look at a company that has shares that can be freely sold and traded to the public. So the basis that the shares can be freely sold and traded to the public, there is more opportunity that this public limited company can raise more capital as opposed to private limited company, whereby private limited company we are saying its shares are not traded publicly on exchanges. So the fact that they are not traded publicly on exchanges, it limits its capacity to raise more capital. So in that case, we have a public limited company as our correct response. And on number two, which of the following is an advantage of using manual methods of processing data? And remember, when we are looking at a manual method of processing data, this is physically inputting data into a system or a database by human operators. So this is the description of a manual method of processing, which means we are not using computerized systems. It's physically inputting information into the systems. So in that case, what can be an advantage of in that scenario? We have different answers that we have there from A to D, but you'll see that the correct that we have there in terms of an advantage of using manual method of processing data is cheap to use is the most appropriate. Because if you look at B, we have got faster to process data, of which manual is not faster. Minimize errors. You see that when we are having manual methods, we are going to have more possibilities of human error. And then we also have stores more information. You are not going to store more information because of the issue of manually inputting the data. So in that case, cheap to use becomes the correct response. As we are saying, cheap to use because we are not going to be forced to acquire the softwares or the systems that are needed for us to do the computer systems. So in that case, we go to number three, which says a trader bought goods on credit. Which source document was used? We have got different source documents that were given all our response section, but we are given a scenario whereby a trader bought goods. So in that case, when we, as a business, buy goods, obviously, we are going to buy on credit. So the keyword that we have here is that we are buying on credit. Remember, when you buy on cash, we are having a receipt as a source document that makes a receipt out of the answer that we have. But when you are buying on credit, it's going to be an invoice. But in this case, we are buying, so it's going to be a purchases invoice. So this is what we have, which is a P. Number four, what is the source document for the sales and returns journal? So sales and returns journal, these are returns goods that are being returned to the business that were previously sold. So obviously, we have a scenario whereby when we sold these goods, we debited them in the debtors account. And when we are now removing them, they are being returned, you are supposed to credit them in the debtors account. So by crediting, we are supposed to have a credit note as a source document. So we have got a credit note as the correct response. So we go to number five. Office equipment sold on credit is recorded in the so in that case, office equipment, but we've got different subsidiary books or journals that we are given in the other section. We've got cash book, general journal, sales journal, purchase journal. But we know that in the purchase journal, we are having the names of the suppliers that we bought goods from on credit. In the sales journal, the customers that we sold goods to on credit. And general journal, all other transactions that do not qualify in in these journals will be posted to the general journal. Cash book, we are looking at cash and bank transactions. So in that case, if you look at the transaction that we have, it's office equipment that was sold on credit. If it was sold on cash, it was supposed to be in the cash book. But since it's being sold on credit, it means it doesn't qualify in the cash book, and we have to enter it in the general journal. Remember, the general journal, we are saying the transactions that do not qualify in all other journals, all of them, we put them in the general journal. So we have general journal as the correct response. We go to number 6. Which of the following accounts is found in the private ledger? So we have got bank account, capital account, trade receivables account, wages and salaries account of which, and the correct response that we have is capital and capital account. Then we move on to the next one, number 7. Goods bought by check were recorded in the purchases account and omitted in the bank account. To correct the error, so we obviously we are seeing that there is an error that transpired where goods were bought by check were recorded in the purchase account and omitted in the bank account. So what was the double entry that was supposed to be there? We are supposed to debit purchases, and then we are also supposed to credit. They were bought by check, so we are supposed to credit the bank. So in this case, it means the bank entry was not done. That's what it means. Is they are saying it omitted in the bank account. So it means this one was not done. So it was only entered one side, which means it's going to affect the balancing of the trial balance. So any error that affects the balancing of trial balance is supposed to be corrected by the suspense account. So we are supposed to enter the credit entry that was supposed to be entered of the bank account, and then we debit the suspense account. So according to the answers that we have C, whereby we are crediting a bank account and then we are debiting a suspense account. So we have C as the correct response. So we go number 8. A trader decides to create a provision for bad debts. This is in accordance to the so we are given different principles or concepts in our answer session. So we need to try to see which concepts do apply when we are providing for provision for bad debts. But obviously, when we are providing for a provision for bad debts, we are trying to reduce the profits, because our provision for bad debts is a non-cash item, and there is no cash that is being paid for that provision, but we are charging it as an expense in the profit and loss account as an expense. So in that case, we see that the profit figure is going to be reduced. So in that case, we are being conservative, which means we are not overstating profit. So in that case, according to the response that we have, see that the correct concept is a prudence concept. We can call it prudence concept or prudence principle. It ensures that income and assets are not overstated in financial statements. So that's what it says. So we have D as the correct response. Moving on to number 9, in a statement of financial position of a sole trader, what makes up owner's equity? And remember the formula that we use to calculate the closing capital. So the closing capital figure is the one that is being referred to owner's equity. So the formula that we use to calculate the closing capital says closing capital is equals to opening capital. We add net profit, but of course we know that whenever there is a loss, we are supposed to subtract net loss. So in that case, we also, if there's any additional capital, we add additional capital, and then we are supposed to less our drawings. So this is the formula. So within this context now, we can now be able to see which is the correct response. So according to our response that we've got opening capital, net, we subtract net loss, which is correct. Also, we subtract net drawings. So A is correct. We come here, we see that this is the scenario that we are having here, whereby we are saying we subtract net profit. We subtract net loss in this case, and then also we subtract drawings, which is the case that we are having here. We are subtracting net loss, we are subtracting drawings. So we are having A as the correct response. So since that the other ones that we have are incorrect, so we are saying A is the correct response. Number 10, in the preparation of financial statement of in the preparation of statement of financial position, which items are classified as current liabilities? So very simple it is. We have got the first one is saying income owing, of course, is a current liability. We look at Income owing, the next one is inventory of stationery. This one is a current asset. So inventory of stationery is a current asset. Then we move on to B, whereby we have got income owing, rates accrued. We have income owing. Income owing, when it becomes income owing, is not a current liability. Remember, because the question requires, it says, which is classified as current liability, of which income owing is not a current liability, but a current asset. We are saying income owing is a current asset. We can correct that. Then income owing again, B, which makes B again not correct. So A not correct, B not correct. C is saying income prepaid. So income prepaid becomes a current liability, which is correct. And inventory of stationery is also inventory of stationery is a current asset. So that makes it out again. Then you go to the last one, D, which is saying income prepaid and the rest accrued. So when you have income prepaid, it becomes a current liability. So this one is a current liability, of course. And we also have a rest accrued is a current liability. So that makes D the correct response that we have. So we have D as the correct response. So we'll move on to the next part, which is now going to be our number 11. Number 11 says the following transactions appeared in the books of a trader. We have different transactions given, and then the question says which transaction fall under capital expenditure. Of course, we have 1 and 2. 1 and 4, 2 and 3, and then we've got 3 and 5, 3 and 4. So according to now our transactions given, we would want to identify which one is a capital expenditure. What a delivered value, of course, this is a capital expenditure. So we can indicate this one is a capital expenditure. Then on number 2, paid for rented tax, this one is not a capital expenditure. This one is a revenue expenditure. And we've got a paid for carriage on purchases. This one is not, it is a revenue expenditure. Then we've got paid for carriage or delivery van. So a delivery van obviously is being bought and is being brought into the business, so the carriage becomes a capital expenditure. So we have also this one as a capital expenditure. Remember the description that we have in terms of a capital expenditure. These are funds that are used by a company or a business to acquire, upgrade, or maintain physical assets, such as property. We can talk about plants, buildings, vehicles, etc. So in this case, we are talking about vehicles. So we have 1 and 4 as correct responses. So we have got B is correct response, 1 and 4. Then we move on to the next question, which is going to be our question 12. So question 12 reads, items entered on the debit side of a trade payables control account include. So we know that in a trade payables control account, on the credit side, that's where we are going to have the purchases. Anything that increases the purchases goes to the credit side, and anything that reduces the purchases or that is going to reduce the creditors, we are going to see it on the debit side. So we check for those as the question requires what to be on the debit side. So on the debit side, we are looking at things that are going to reduce the trade payables or the creditors. So in that case, we check what we have in the answer section. Credit purchases, they do increase our purchases. So this one is out, which is the first one. Then we look at B, returns outwards. Of course, returns outwards do reduces, and credit purchases now increases. So that makes B out again. Returns outwards, of course, returns outwards, we debit them in the trade payables control. And then discount received also reduces. Discount received. If you look at discount received, also, as you are going to see that it's going to reduce the amount of our purchases. So that makes C correct. That makes C correct. So cash refund, you know that cash refund, when we pay those trade payables or the creditors, when we pay them, we're going to debit the trade payables control. So when there's a refund, it goes to the credit side. So basically, that's what we have. So we have C as the correct response. The number 13, information entered in control accounts is extracted from the. Remember, we have the control account. So the scenario that we have is we are having control. We are having journal. Sorry, we start with our journals, or we call them subsidiary books, and then the information is transferred to the control as total figures. Total figures, so we transfer them as total figures of journals. Then individual entries in the journals are now entered in the ledger. So same information that is posted in the control is same information that is going to be posted in the ledger. So that's what we have. So we go to our question is saying information entered in control accounts extracted from they are journals or subsidiary books, which we are having C. So C becomes the correct. Then we go to number 14. Which of the following is used on the preparation of bank reconciliation statement? We have got bank charges. You know that bank charges, they will be on the bank statement, so they are not going to be used to prepare bank reconciliation. They can only be updated in the cash book. So this one is out. Cash book error. We have got a cash book error that is not entered in the bank reconciliation. It is updated in the cash book. And you go to again a credit transfer. Credit transfer will be on the bank statement, but it won't be appearing in the cash book. Remember, we'll only get to know about the credit transfer when we get hold of the bank statement. So this one is out again. But when we look at unpresented check now, unpresented check is the one that needs to be in the bank reconciliation statement. We are saying there is a check that was supposed to be processed, that was issued by the business to the bank, but the bank didn't process that, or it wasn't presented to the bank. So in that case, we are saying on the bank reconciliation is supposed to be there. So we have D as correct response. Go to number 15. Which of the following items are used to update the cash book? Of course, bank charges, we do use them, and standing order, we use them to update the cash book. So that makes A correct. So we have A is correct. We can check other responses that we have. B is saying deposits not yet credited, and standing order. The standing order is used to update the cash book, and then deposits not yet credited are supposed to be on the bank reconciliation, not in the cash book. Then unpresented check again, we have them on the bank reconciliation, not cash book. So that makes C and D again correct. So A is the one that is correct. Then you go to margin. Margin, we express margin as a formula whereby we are saying gross profits expressed as a percentage of turnover. So we have B. Number 17, which of the following can be used to calculate purchases? We know that for purchases, this we derive this on the calculation of cost of sales, whereby we say opening stock, we add purchases, we less closing stock. So in this case, we want to make our purchases the sum of the formula. We have got purchases here, which we are supposed to make at the sum of the formula. So when we make purchases sum of the formula, there is supposed to be purchases equal to our cost of sales. This becomes a positive plus our closing stock, then with less opening stock. So we check in terms of the responses that we have, cost of sales, less opening inventory. So this is the case that we have with less opening stock, which is our stock is our inventory, and then we add our closing inventory. So that makes B the correct response. And we go to number 18. Which of the following items is shown in the receipts and payments account? Remember, the receipts and payments account is basically the bank account. So we are saying the receipts and payments account is the bank account. It's bank account, and also we also see that the cash transactions are also there in the receipts and payments account. So we have the response that we have, which is saying cash at end of period, inventory of stationery, substitutions owing at end of period, surplus at end of period. So it is that since we are saying it shows a cash in the bank transaction. So bank account is the items that we put in the cash account and the bank account, all of them, we see them in the receipts and payments account. So in that case, we only look at our cash items. So it's that some of the items that we have are reflecting non-cash items, which is not correct. But if you look at cash at the end of the period, it's the only one that is correct according to responses that we have. So we have A as the correct response. And we go to the next one, number 19. Number 19 reads, which of the following items is credited in an income and expenditure account? Remember, income and expenditure account, we list the income first, we get the total, and then we subtract the total for expenditures, which is going to be below that. So the question is saying which of the following item is credited in an income and expenditure account. So basically, in an income and expenditure account, let's say this is our income and expenditure account. So this is our income and expenditure account. You notice that the income will be on the credit side, and the expenditure will be on the debit side. Basically, that's how we are going to, what we are going to have. So going back to our question, I said, which of the following items is credited in an income and expenditure account? So we are looking at income on the credit side. So according to our responses, we only have D, subscriptions. Remember, subscriptions is an income, so D becomes the correct response. Then we go to number 20, which of the following inventories is part of total cost of production? And remember, on the total cost of production, we are supposed to have our prime cost, which is going to be made up of direct materials and direct labor. And then we go to our factor overheads. So all our factor overheads also is going to increase also the cost of production because we add them. And then at the end of our manufacturing account, we are supposed to add opening work in progress, opening work in progress, and then we subtract closing work in progress. So in terms of a big part of total cost of production, the one that we add is opening work in progress. So opening inventory of work in progress becomes an addition to cost of production. So we have D as the correct response, which is opening inventory of work in progress. Then we go to the next question, which is going to be, next question is 21. Which of the following is part of prep cost for furniture manufacturing company? Remember the prep cost, we said we are supposed to add direct materials and direct labor. So let's check according to responses that we have, which can be part of prime cost, so we are looking at anything that is direct material or direct labor is going to be part of prime cost. So that's what we are looking for. Furniture is a finished product, so we are not going to talk about that. Direct material is made up of the raw materials that we are using to produce. And then we have got a carriage on timber. Carriage on timber. Timber, obviously, we are going to use it to produce the furniture. So it becomes a raw material that we are using to produce, to make the furniture. So basically, B is correct. So we have B as the correct response. Then wages of factory supervisor. This one is not direct but indirect. It's not going to be part of our prime cost. Wages of office supervisor again is going to be an administrative cost, not part of our prime cost. So we go to number 22. So 22 reads cost of unfinished goods at the end of a given period is cost of unfinished goods at the end of a given period is part of our inventory of work in progress. So this is C, which is the correct response. The number 23, which of the following items is shown on the credit side of the partnership appropriation account? Anything that is added in the appropriation account will be on the credit side. So you see that anything that the one that we add in the appropriation is interest on drawings. So it's the one that is supposed to be on the credit side of the partnership appropriation. So we have B as the correct response. We go to 24. Number 24 says, one of the advantages of forming partnership is that, remember partnership, we've got two or more people that are operating in a business. So we are going to have risks being shared or losses being shared. So that is indicated on A, business risks are shared. So that becomes an advantage. So we have A, that's the correct response. Go number 25, which of the following set of items are shown in the statement of changes in equity? Which of the following set of items are shown in the statement of changes in equity? We've got different responses that we have again. But we know that transfer to reserves are shown in the statement of changes, changes in equity. We also have dividends proposed are shown in there in the statement of changes in equity. They cannot be dividends paid. Remember, dividends paid, we are looking at dividends that were actually paid, and they do not belong to the period. Remember, the matching principle also applies when we are preparing the statement of changes in equity, whereby we are saying what belongs to that period should be recorded in that period. So the proposed will be the amount that is representing the period that we are looking at. Then the paid is the actual amount that was paid, which doesn't reflect what belongs to that period. So we have D as the correct response. So we go to the next one, number 26. Which business ethic will a company apply if it requires its employees to keep company information to themselves? Of course, and that is confidentiality. We have it at C. Number 27. A trader's trial balance failed to agree. It was discovered that sales returns were overcast by 800. The effect of this error on the trial balance was 2. So the sales returns were overcast. So it's overcast means there was a bigger figure with 800 for sales returns. And we know that sales returns are on the debit side of the trial balance. So the debit side is the one that's going to have a bigger figure with 800. So we check according to responses that we have. Increase the debit side by 800, which is B. Number 28, the following balances were extracted from the ledger of a business. Total debit balances in the trial balance amounted to. So we need to identify which one goes to the debit side of the trial balance. But basically, we know that for our trial balance, we are going to have our debit side and our credit side, of course. So this is a typical trial balance. We are having a typical trial balance. Whereby we have the debit and the credit. So we should basically know what goes to the credit, what goes to the credit, and what goes to the debit. So in this case now, we are saying on the credit side, usually we see liabilities. We see all incomes on the credit side. And then debit side, we see assets, we see expenses. And capital also come on the credit side. And here we see also drawings. So basically, this is a breakdown in terms of what we see on the debit side and credit side of the trial balance. So according to the question now, we check according to information given, we need the debit balances. Provision for depreciation should be on the credit side, but office equipment is one which is a fixed asset which will be on the debit side. But when it's provision for depreciation, it will be the credit side. It's not part of that. But drawings is part of the debit side. Returns outwards, we had purchased, so returning outwards, remember purchases will be on the debit side of the trial balance, and when they are now returns, they go to the credit side. So this one is out. Returns inwards, sales will be on the credit side. When they are returns, they come on the debit side. So returns inwards are sales returns. So this is the debit side again. And the discount allowed is an expense. For expense, all expenses will be on the debit side. So basically, that's what we have. So it means in terms of our breakdown, we can see that we have some items also that we can add, whereby sales, we see it on the credit side, whereby purchases, we see purchases on the debit side. When they now become our sales returns, it's now the opposite. Sales returns will be on the debit side, and then purchase returns will be on the credit side. So basically, that's the scenario that we have. So with that, we can add the ones that we've identified as the debits balances, whereby we are adding 7,800 plus 1,900 plus 800. And then the answer that we are supposed to get is 10,500. So if 10,500 be, so basically we are saying 7,800, and then we add 1,900, then we add 800. And then we are saying we are supposed to get 10,500. So basically that's what we have on that part. Then number 29, a trader provided the following information. 2020 January 1, office equipment, it costs 35,000. During the year, the following transactions took place. Office equipment with a cost of $4,000 was sold. And then item 2, additional equipment was purchased, $4,500. Then on 31 December 2020, office equipment was valued at $29,200. The depreciation charge for office equipment on 31 December 2020 was. So we are already given that it was valued at the end of the period as 29,200. So basically, the valuation that we are given here represents the net book value. So it means this is our net book value, and we know that to calculate our net book value, we say cost minus accumulated depreciation. Then we get our net book value. We can call it net book value, or we can call it the carrying value. So we get our net book value. So this is the formula to get our net book value. So this is 29,200 that we have there. So the question needs us to calculate depreciation charge for office equipment on 31 December 2020. The depreciation charge for office equipment on 31 December 2020. So in that case now, we are saying what was the accumulated depreciation at the end of the year. We first calculate the accumulated depreciation that we have at the end of the year, which is this figure is the one that we need to find out. Whereby the cost, we can find it by saying we had 35,000 that we had at the beginning in terms of the of equipment that we had at the beginning. Then there was an addition, and there was a subtraction in terms of what was sold. So additional equipment was purchased here of 12,500. So we add 12,500. And then we subtract what was sold, which is 4,000. Office equipment with a cost price of 4,000 was sold, so we subtract that one. So let's just try to see what was the cost at the end. So here we're going to get 43,500. So this is the cost that we have at the end, 43,500. So in that case now, we come here, we are going to say, using this formula that we have here, we are supposed to find our depreciation here, our accumulated depreciation on this case. So our cost, we found it as 43,500. And then we subtract our depreciation, which is accumulated depreciation. But in this case, we do not have depreciation at the beginning of the period. So we can just call it depreciation, and then we get our net book value, which we are given as 29,200. So to make D the sum of the formula, we can take D this other side, it becomes D. And here it becomes 43,500. And then if you take 29,200 the other side, it becomes a negative 29,200. So in that case, we are saying 43,500 minus 29,200 to get our depreciation. So at the end, you'd see that you can just try to calculate that 43,500 minus 29,200. And then we're going to get 14,300 as your depreciation. So basically, that's what we have. So in terms of that, our answers, we've got 14,300 on C. So C is the correct response. But if we were given accumulated depreciation at the beginning, we were supposed to find the difference to see what was the depreciation for the current period to make it the depreciation charge. But in our scenario, we are only given the cost at the beginning, which means there was no depreciation at the beginning of the year. So we are assuming that the depreciation that we got there is the depreciation for the year. So basically, that's what we have in terms of question 29. And then we go to the next question that we have, which is going to be question 30. A trader provided the following information at the end of the financial year. We've got information given, and then interest on loan was 10% per annum. The net profit for the year was. So we have gross profit. So we subtract all the expenses that we have. So we are saying gross profit is 25,600. And then we subtract a loan interest paid. Uh, Loan interest paid, we are having it as we're given 10% as our interest per annum, and then we are given other expenses. So we can first subtract our 2,500, which is our discount allowed, and then the loan we are given the amount is 10,000. So I remember when we are preparing the profit and loss account or the income statement, we are applying the matching principle. What does the matching principle say? It says what belongs to the current period should be recorded in the current period, and what doesn't belong to the current period should not be recorded as the current period. So basically, what we are saying is what was paid is not what belongs to this period. What belongs to this period in terms of loan interest is the 10% of the loan amount, which is 10,000, whether paid or not. So we are going to say 10%, which is 10 over 100, and then we multiply by 10,000 to get the interest that's supposed to be for the current period. So if you do that, you get 1,000. So this 1,000 is the loan interest for the current period. So what it means is out of 1,000, what was only paid was 800. So it means we have got loan interest that is owing for the current period. So basically, we are saying for interest, we are subtracting 1,000. So it means we are subtracting the 2 from 25,600. We can try to see and use our calculators to see what is correct. What is the correct answer there? 25,600 minus 2,500, and then we subtract also 1,000. And we get 22,100, which you are having at A. So we are saying A is the correct answer. Then we go to number 31. A trader bought printing machinery for $33,500. The following expenses were incurred. Cost of installing the machine, $705. Carriage cost of the machine, $210. Printing the stationery, $60. The amount debited to the machinery account was. So this is a printing machinery that is being bought. Remember the concept of capital expenditure in terms of the definition of capital expenditure. What does it say? It says it is the money or funds that are used by business to acquire, to upgrade, or to maintain physical assets. So anything that is we are going to incur to acquire this machinery that we have here is going to be part of the value of that machinery. So what is going to be debited to machinery is cost of installing is going to be part of that. So we have 3,500, and then we add 705. Carriage cost of the machinery also we are supposed to include it, but we don't include the printing stationery. This is not part of our capital expenditure. So we add there and we see what we get. So we're saying 3,500. We add 705. We add 210. We are getting 4,450, which is our C. So we have C as correct response. The number 32 is saying a trader provided the following information. We've got balances with bank statement, 14,100. Checks not yet presented for payment, 5,600. Deposits not yet credited, 9,700. The bank credited the account of the trader by 7,100 in error. What was the balance per cash book? So basically, what are we saying? We can start with the balances with bank statement, 14,100. Which is a credit balance. Credit balance, which means it was a positive balance. It's a positive balance. And then if it was a debit balance, if it was DRA, it means it was going to be a negative here. So what we are going to do, we are going to have the first item, which is saying checks not yet presented for payment. So these checks are supposed to be subtracted if we are starting with balances per bank statement. So we are saying here we've got 5,600, which we are supposed to subtract. And then deposit not yet credited, they are supposed to be added, 9,700. And then we've got the bank credit, the account of the trader by 7,100 in error. When it's being credited, it's an addition to this balance. So it was credited in error, so we are supposed to remove it. By removing it, we are subtracting. So we've got 7,100 again, which needs to be subtracted. 7,100. So basically, that's what we have on that part. So what are we saying here? We've got 7,100. So from there, we can now be able to calculate to find our answer. So let's try to calculate it. We are starting with 40,100. We subtract 5,600. We add 9,700. We subtract 7,100. We get 11,100. So we have 11,100, which we are having a B. So basically, that's what we have on that part. So we go to the next one. A trader provided the following information. What was the markup? Remember the formula of markup. What does it say? Markup says we have got our gross profit over our cost of sales is equals to our markup. So what we have in terms of gross profit, we have 30,000. 30,000 as our gross profit, and then we divide by cost of sales, which we are given as 60,000. Multiply by, we are given it as a fraction, so we can leave it like that, and then reduce it to the lowest terms to leave it in the fraction form. So in that case, we have got 30,000 into 30,000, we get a 1. 30,000 into 60,000, we get a 2. So it becomes 1 over 2, which we are having at D. So we have D as the correct response. The following information was provided by a trader. We've got markup, we've got margin. What was the turnover figure? So turnover is our sales after we've subtracted our sales returns. So turnover, we are given cost of sales, we are given markup. So get our sales, we are going to use the formula. Sales is equals to cost of sales plus gross profit. Sales is equals to cost of sales plus gross profit, but of course we've got a cost of sales, but don't have a gross profit. So our gross profit, we can use it, we can find it using the markup. Remember, markup we said is equal to cost of sales over, sorry, it's equal to gross profit over cost of sales. So basically we are saying cost of sales over our gross profit over cost of sales. So what are we saying? We are saying our gross profit, we don't have it, the one that we are looking for, over our cost of sales, which is 150,000. Will give us the markup, which is 20%. So 20% is a decimal is 0.2. So in this case, we are saying our gross profit, make it some of the formula, it becomes gross profit equals 0.2 times 150,000. If you multiply by 150,000 both sides, our gross profit will remain as gross profit here. So 0.2 times 150,000 to get our gross profit. Let's try to see. You get your 30,000. So here you've got 30,000 as our gross profit. So we come here to find our sales, which is our turnover. Cost of sales, of course, we have already identified cost of sales as 150 a year. So we are saying Our sales is close to cost of sales 150,000 plus our gross profit that we have calculated at this point, which is 30,000. And we are going to get your answer as 180,000. So basically this becomes your sales, which is your turnover. So 180,000, we are having it on C. So we have C as the correct response. Number 35. On 1 January 2020, a softball club had the following assets and liabilities. What was the accumulated fund? So accumulated fund basically is the capital. Accumulated fund is the capital. So how do we calculate it? The accounting equation is what we use. Remember, the accounting equation says assets is equals to capital. Our capital in this case is accumulated fund plus liability. So to calculate accumulated fund, to make it something, the formula, it becomes accumulated fund is equals to assets minus liabilities. So basically, that's what we're going to have. So according to what we have there, subscriptions in arrears is subscriptions in arrears. Subscriptions is an income. So this is an income owing or an accrual of income, it becomes a current asset. So we have got an asset here. And then the subscriptions in advance is a liability. So sports equipment is an asset. Wages outstanding is a liability. Insurance prepaid is an asset. So we try to see, let's start by adding our assets so that we get the total for assets. So for assets, we are saying 1,200, which is here. And then we add our 12,300. And then we add our 100. We get 13,600. So for assets, we've got 13,600. Then we subtract the total for liabilities. We have 800. And then we add our 650. We get 1,450. Then we subtract the two. You get 12,150. So this becomes your accumulated fund, which we are given here as B. So we go to the next one, which is number 36. A trader at the shop with 2 departments, the following information was provided. During the year, the owner took clothes worth 1,600 for personal use. The cost of sales for the clothing department was, okay, the clothing department is here. We are having the clothing department is shown in this part. And we are given drawings which do not affect the calculation of cost of sales. Drawings is not part of the formula for cost of sales. Cost of sales, remember the formula that we use, we say cost of sales is equals to opening stock, which is our opening inventory. We add our purchases, we subtract our closing stock. So what do we have in terms of the information given? We have got our open inventory, we add our purchases. Remember, we're also supposed to add our carriage. We are also supposed to add our carriage here, purchases, and then we add also carriage inwards, which is carriage on purchases. So according to the information given, we are having our open inventory is 32,500 according to our clothing department. So we have 32,500, and then we add our purchases, which is 77,100. We add our carriage inwards 4,200. And in terms of closing stock, we are seeing that we do not have anything. So for our closing stock, we are saying there was nothing. So in that case, we We say 32,500 plus 77,100. And then 4,200 is carried inwards. We add again 4,200. Get 113,800, which you are having at C. So that's the calculation that we have on 36 and 37. A departmental store provided the following information. The combined profit and loss account showed a net profit of, so we are given a profit of A and B. So it means we are going to add it. We add this one plus this one. And what do we get? We say 12,600 plus 50,100. 27,700. And then for commission received, we are supposed to add it because it's an income, get 34,000. And then we subtract carried on sales, which is 2,400. Get 31,600, which we are having at C. So basically, after having this, you add your 6,300, and then you subtract your 2,400. And then you get your 31,600, which we are having C. And you go to number 38. A private limited company provided the following information. Total issued capital was, so the issued capital is described as 200,000 order shares of $2 each. So basically, we say 200,000 times $2. You're going to get your answer is, you're going to get your answer is 400,000. Then this one is 600,000, but 50 cents each. So 50 cents times 600,000, you get 300,000. Then you add the two, you get 700,000. So basically 700,000, we have it C. Then you go to the next part, which is now 39. Following ledger account appeared in the books of a trader. What is meant by the entry on 15 August 2020? 15 August is this one. Farai booksellers, and it's a packaging materials account. So obviously, this is a packaging material that is coming in that was bought, but the description is Farai booksellers. That's the detail. So it means it was purchased on credit. So according to our answer section, what do we say? Package is material bought on credit from Farai booksellers, which is B. But if it was bank here, it means it was purchased by check. Then we go to number 40, which is the last question. The following ledger account was obtained from the books of a trader. They're given a provision for doubtful debts account. And then the question says the entry income statement 1,200 represents. So remember, provision for doubtful debts is either we identify an increase, which will be an expense, after comparing the level of provision for doubtful debts for the current period and for the one that we have for the last year. So if it is increased, it's an expense with the increase. And then if it's a decrease, it's income. And it is when it's an income, it's supposed to be under other income. When an expense, it goes under less expenses. So in that case now, we are saying it's on the debit side. So when it's on the debit side, it's a decrease. When you find it on the debit side of the provision for doubtful debts, it's a decrease. So this one is a decrease. But if you find it on the credit side, it is an increase. When the income statement is on the credit side, it is an increase. So in this case, it's a decrease in provision for doubtful debts. And it's supposed to be credited to the income statement. Credited meaning it's an income. All incomes are credited to the income statement, and all expenses are debited to the income statement. So basically, that's what we have. On the last question, we have the decrease in provision for doubtful debts credited to the income statement as A as correct response. So this is what we have, guys, according to the question paper of June 2025. Thank you for listening, and hopefully the video was helpful. Let's not forget to subscribe and share to our video. Let's keep tuned. More videos are going to come as we prepare for exams. We'll meet again in the next video.